Shares of MEG Energy moving higher today. The Canadian Oil Producers Board urging shareholders to reject that takeover bid from Strathcona Resources, calling the nearly $6 billion bid inadequate. So for more on the story and oil price trends, let's go to David Szybunka. He's Senior Portfolio Manager, Managing Director, Energy Team at Canoe Financial. Thanks for joining us.
Hey, thanks for having me.
So you heard the board say it's inadequate, reiterating what they've thought for a long time. Do you see it that way? What's your take on this bid by Strathcona?
Yeah, I mean, this is definitely consensus that they would turn this down. And I think the most important thing for investors to understand is, let's start at what's been happening the last 2-3 years in the energy sector. Biggest M&A cycle I've seen in my career. And so a lot of M&A is going on, fewer and fewer companies forming, controlling more and more of the quality resource. And so when you kind of just look at the basin today, there's less and less quality assets available. And so when you have these premium assets like a MEG, the assets are going to clear for at higher prices than you think. And just to kind of also put some context to things, when you look at assets that are clearing in Saskatchewan, as an example, say Vermilion here a month ago, assets like that were clearing at call it 3.5-4 times cash flow. Even myself, I was like, well, that's a pretty good price for Vermilion. It's happening because there's a lot of private equity behind the scenes coming into the sector. So when you have private equity coming in, companies that don't need to do anything because the balance sheets are so good, and then you have a scarcity of premium assets, you put all this in a mixer and the valuation's got to go higher for these better quality names.
I want to talk more about what predicated, as you say, these mergers and acquisitions in a moment. But Strathcona has done quite a series of acquisitions over the last 5 years. Do you see MEG as a fit for that company?
Yeah, I think MEG could be a fit for a lot of companies. When you look at the large oil sands guys, I think whether it's a Suncor or other guys, they could tack something on like this very easy. It fits into the Strathcona profile. Even players like our brains are trained to go, an oil sands co should buy an oil sands co, Montney should buy Montney, gas should buy gas. I think as we fast forward the clock, I wouldn't be surprised to see various companies own different basins. That's not on trend today, but we could see that that's where the puck could be going to. So it fits into a lot of different pieces, whether it's a Strathcona or other oil sands guys or even other basins.
What do you think then did predicate this movement or this cycle of M&A?
Look, like we're seeing lots of M&A. There's a strive for companies to get larger, but when I just put it all in a mixer, I look at the sector and the valuations have been too low for the better quality assets. When I look at the last 12-18 months, because in capital markets, money's been leaving the energy sector to go to other places, we saw the valuations for the MEGs and some other names start to expand. And in the last 12 to 18 months, the multiples have been contracting because capital's been leaving to chase other sectors as people are giving up on the commodity cycle. The producer always closes the arb, not the investor, right? The investor always reacts. And so that's important as it relates to why more and more of these are going to continue to happen. Unless the better quality assets start trading at higher premiums, you're going to see more and more M&A.
So oil prices retreated today after that spike on Friday with the Israel-Iran situation. Do you think the volatility at this point is sort of baked in?
So again, let's start at 50,000 feet. When we look at the last kind of 20 years, we've had low geopolitical risk and cheap energy costs for consumers. What's been happening the last couple of years? We've been watching elevated geopolitical risk happen. The world is becoming more fragmented. When that starts to happen, you're laying out a different regime for a playbook going forward. The world's dividing, and that results in price spikes for commodities over time as you structurally underinvest. And so I can see that there's just this push that investors want to right away ascribe, like oil prices are going to spike, oil prices are going to go down. I think for us talking to our investors, we would more point them towards what's my biggest takeaway from kind of Friday. I think people are underrepresented with energy in their portfolios. When you look at the energy sector on Friday, it was up almost 2% and every other sector was down. And so this has implications in the long term to commodity cycles as we watch these geopolitical events happen. And the more and more that you feel this, you're going to feel underrepresented in portfolios. And today there's a lot of people that are underweight. What
would you recommend? What kind of mix would you advise your investors to take on?
Well, you bring up an interesting point. And so as we've been watching money leave the sector the last 12 to 24 months, I feel like the only people left are kind of the energy specialists, the hedge funds that are paying attention. And so when you're in that type of backdrop, people are always like, do you like natural gas or do you like oil? They try and pin it against each other. Which camp are you in? Well, when you go through periods like Friday, you just kind of feel like you should own some energy equities. And so I think for me, I think as we started the conversation on MEG and we're kind of pivoting to more broad-based energy, I can just see how one day you feel like you should have gas, the next day power, the next day uranium, the next day oil. People are underrepresented in this asset class as we look at sentiment and positioning and market capitalization of energy relative to the market. There's a lot of reasons to be looking up, and a lot of people have been looking down with a lot of these OPEC headlines, and we point them to just get some energy weight within their portfolios.
Okay, so let's talk about supply and demand, because you mentioned OPEC. We also touched on the fact that we don't know what's going on with Iran and its supply moving forward as it is involved in this conflict. How does supply and demand look to you over sort of the summer months till the end of the year?
Yeah, so as we start to try and pinpoint the price, I mean, I can make a guesstimate on that, if you will, but that's not my expertise to know exactly where the price is going to go. So what are the important things to know? Well, you cannot create a multi-year uptrend in a commodity, any commodity, with just shortages of supply. That doesn't create a longevity to the cycle. You can get price spikes, and they can be very violent, and they can go up a lot more than people understand. But what drives a multi-year trend in any commodity is a demand push. Having a multi-year demand push is what creates a multi-year uptrend. So as we look at the oil backdrop today in the oil market, everyone was worried about too much supply with OPEC adding back barrels. Now you live through the last kind of 3, 4, 5 days here, and you feel like there could be an outage any day on the supply side. What creates the multi-year trend? A demand push. And so what are the ingredients that we see brewing in the background that are not necessarily on our doorstep today, but we can see them brewing? Structural underinvestment. We watch companies just be defending themselves to investors on buybacks and dividends. No one really wants growth. US dollar's kind of in free fall here, right? We've had an uptrend of the US dollar for 10, 15 years. As the US dollar goes lower, it will result in more commodity demand for all developing markets. This could be the biggest unleashing in demand that we've ever seen. Well, if you start to get some version of what I just said there at a time of structural underinvestment, there's your demand push, right? And so this is all brewing, but it's a little further out than what we're all kind of talking about over the summer months. And so these are things that we're watching from our shoes here today.